Hi guys, welcome to our channel, Real Estate Raw New York Edition with Julie and Terry. In today's video, we're going to dive into tax lien homes and how you could purchase one. If you're a first-time home buyer, looking for a deal, or just curious about real estate investments, this is the video for you. You can contact Terry or myself to hook you up with an investor. Tax liens. Tax lien home in New York can be your way to become a homeowner. I guess you didn't know that. Here is how it works. When a homeowner in New York falls behind on property taxes, the city could put a lien on their house, which is basically an IOU. Simply means in finance, IOU. It's a written acknowledgement debt between two parties. It's essential and a simple informal document that records a debt and agreement to repay it. While not as informal as a legally binding promissory note, it serves as evidence of the debt. Okay, let me brief you a little on tax liens. For current homeowners, a federal tax lien is the government legal claim against your property. When you neglect or fail to pay a tax debt $10,000 or more, and no arrangements are made to pay it off within 6 years. However, the IRS business rule states if you owe less than $10,000 or if you owe between $25,000 and $50,000 and agree to direct debit payments from your bank account or wages, they will file a lien against your home. With that said, if you owe over $50,000 regardless of a payment agreement or not, IRS will still finally file a lien against your home. The lien filed against your home by the government is to protect the government's interest in all your properties, including real estate, personal property, and financial assets. A federal tax lien exists only after the IRS put your balance due on the books, assess your liabilities, send you multiple bills that explain how much you owe, notice and demands for payments, and you in turn neglect or refuse to fully pay the debt in time. Basically, you ignore the letters. The IRS then files a public document called the Notice of Federal Tax Lien to alert creditors that the government has a legal right to your property. Terry will walk you through the next steps.
The city then auctions off that lease to investors, and the lucky winner pays the back taxes in exchange for the right to collect a debt plus interest from the owner of the property. If the owner cannot pay up, you could end up owning the home. Sounds tempting, right? But here's the catch. Listen up. The next thing I'm about to tell you is very, very important. Buying or paying off a tax lien does not mean that you own the home. The original owner can still pay off the debt and keep their house. When that happens, now you have to take it up with the original homeowners to get your money back, which is not always easy. Sometimes you have to fight them for it, even take them to court sometimes. But make sure you do your homework first, such as title searches and property inspections, just so you'll know what you're dealing with. Meaning, title search on a property is a process that verifies ownership and ensures that there are no claims or liens against the property. You don't want anything that could affect the buyer's ownership rights. This is a crucial step in the home buying process that helps to protect the buyer, and it also protects the lender from potential financial losses due to title defects. Not every tax lien leads to a dream home. You would like that, but with the right research, it can be an incredible investment opportunity. Bottom line, tax lien homes in New York can be a smart, budget-friendly path to home ownership. But make sure you know the risk before diving in. Happy house hunting! Stay tuned by smashing that subscribe button and ringing the bell so you can be notified when we're uploading the basic steps in going through the process of owning a tax lien property. Please support our channel. You can do that by subscribing, like, and share. Don't forget to comment also to let us know what you would like to hear in our next video. Bye. Have a good day.